Okay, we're live. David Shelley, welcome to the live cost construction experience. Great to have you here.
Great to be here, Kieran.
Good stuff. Before we jump in, can you explain what is Property Bridges?
Yeah, so Property Bridges is an alternative finance provider to the construction market. We're different from some of the other alternative providers in that we raise our money through our online platform. It's a process known as peer-to-peer lending. Yeah. So this process is quite common in the UK. It's quite common in the States. It's essentially been growing all over the world.
Yeah.
It's been in Ireland since 2013. There's a firm called Linked Finance.
Yeah, we're out.
They use the peer-to-peer model, but they focus on lending to SMEs. They're not necessarily focused on construction. We're different in the sense that we only focus on the construction market. So we provide bridging and development loans.
What was your thinking there? So we first met on the NDRC accelerator, and you were very focused at that stage that this was going to be a construction play. What was the thinking there? Why construction?
Yeah, so I guess family background. My dad was a small local developer. I kind of went down the finance route.
Yeah.
Moved to London, and when I came back from London in 2013, it was obvious that there was a massive funding gap.
Yeah.
So traditionally, it would have been the banks that would have lent for construction. The banks were decimated after the financial crash in Ireland.
Yeah.
So came back, and there was no one really lending. There was some private equity money coming in from international funds, but they very much went after the bigger guys. So any kind of construction projects that were 5 million and above.
Yeah.
So we could see that there was a gap in the market, that no one was really servicing small to medium-sized developers.
So would that be your traditional sort of 1 to 5 house developments, that type of stuff?
Yeah,
or?
anything from a loan from 250 grand right up to 5 million is what we could service at the minute. Yeah.
Okay. You mentioned something there, peer-to-peer lending. Can you explain what that is?
So peer-to-peer lending kind of evolved whenever the internet came about.
Yeah.
So it essentially means people lending to people. So you're removing the middleman, you're removing the bank, whereas traditionally we would have held our deposits in the bank.
Right.
And the banks would have, unbeknownst to you, the bank would have used that money and they would have put it to work by lending it out. So peer-to-peer is just a new model of financing. So it's people with their own money instead of putting it on deposit, because you can't get any return on deposits at the minute.
At the moment, yeah.
The interest rates are very, very low. This allows people to control their own money. So you can go on to a number of web platforms in Ireland and the UK at the minute. You can invest in construction projects, you can invest in different businesses.
Yeah.
You can actually give people personal loans as well.
So this is your standard Mr. and Mrs. Jones. Rather than leaving money sitting around the bank or credit union, they can essentially invest into a construction project.
Exactly, yeah. So we give people a discretion to go onto our website. We package up the investment. So our team would do all the due diligence on the project.
Yeah.
We would do the legal, so we would take legal first charge.
That's a security I have, is it? As a
so
investor?
First charge security over the physical asset, which is usually a development site or a property. We would package that up. We would promote that on our online platform, and then our lenders can go in and they can invest in whichever projects they want to invest in. So instead of, whenever I worked in the investment industry in the UK, I was working for an investment bank, and we would have serviced the big funds, the big pension funds, and there's a lot of layers of intermediation between the investor and the investment.
Yeah.
And people don't know where their money's going. They don't know what is being invested in. They also don't see the fees that are coming out throughout all the layers of intermediation. So what we do is we let people invest directly and make their own decisions as well.
Very good.
So they can invest in their own community, they can invest in social housing projects, and they can invest in projects that they care about, really.
Yeah. So what would a typical project look like then on the platform? What sort of stuff's been done today?
Yeah, so we've been going a year, so we've raised over 3 million to date.
Nice.
And we're planning to raise at least 20 million next year for construction projects. So our first project was a single house build in Sandy Cove, County Dublin, and then we funded the development of 6 social houses in Kilkenny, and our biggest loan to date has been a 16 unit development in County Limerick.
Yeah.
Now,
how would sorry to jump in there? How would you manage the phase? I mean, I'd presume that the money is secured based on milestones being hit on the project. Is that how that works?
Yeah, exactly. So from the outset of the project, our lending managers would, well, first of all, we'd do an initial assessment.
Yeah.
Then we'd issue a term sheet. If those terms were accepted, we would get a deposit from the developer. We would then do the legals. We would set out a facility agreement with all the terms and milestones set out, and that would be agreed by the borrower. We would then do an initial QS report.
Right.
We use a firm called OCFPM. So they would do an initial report for us. So they would go right down into all the planning details, archaeology, if there's any historic structures in the area. And we would collate that, we would put it in the credit paper, and then we would let our investors see that credit paper.
Yeah.
So it's really down to the investors themselves to decide whether it's a project that they want to invest in.
So if I'm investing, so let's say I put in, what you said the minimum was 500 quid.
500.
So let's say I put me 500 quid in. Are you giving me some security that that project is actually running and the builder hasn't gone out of business or the builder hasn't gone missing? Or?
So we would monitor those projects.
Right, yeah.
So the QS firm that does the initial report would also monitor the project as it's ongoing, as we would as well.
Yeah, yeah.
So we would coordinate with the developer, with the QS firm. Every time there's a drawdown, we would get a drawdown report.
Yeah, okay.
So the builder would submit, and this is where live costs come into it. So they would collate their invoices. They would tell us how much they've spent on the project over the last 30 days. We would get that verified from our own QS, and then we would allow the drawdown. So
there is security in play there.
Yeah.
So that's me investing as, say, my Mr. and Mrs. Jones model. As a builder, then coming to you, I suppose what advantages do I have? Which is the obvious one, as you touched on, is they can't get access to it a lot of times. But I mean, what would be advantages as, let's say, a builder looking at a little development coming to you over, say, going to the traditional lender like the bank? Yeah.
So with all alternative lenders, the biggest advantage going to alternative lender rather than a bank is speed.
Okay.
So the banks, as we know, are very bureaucratic. It could be bouncing around a couple of different divisions within that bank before you get an answer.
Yeah.
The bank also might take 3 months to give you a yes or no.
Yeah.
With us, it's quite quick. We'll do an initial assessment. We'll usually come to some headline terms within 48 hours, whether we want to do the project or not, and then if those are accepted, then we start the due diligence. So it's very quick.
That is quick.
Now the advantage with going through our model from the other alternative lenders are the fact that essentially we have our own internal credit committee. So even with some of the alternative lenders, they would be getting a lot of their money from private equity firms in the States or the UK. Quite often the credit committee might sit once a month, and that the decision would be made a lot of the times externally.
Yeah.
So with us, we have an internal credit committee, and aside from that, we also market. We do a lot of marketing as well.
Yeah.
So we would go out, we would market to our lenders, and quite often if we look at this development in Limerick, for example, that's 16 units and they're going for open market sale. So with the marketing that we've done, we've actually got prospective purchasers of those properties coming on to us, trying to get in touch with the developer to buy those units.
Yeah, that's interesting. I mean, the speed of answer makes such a difference. When if you're waiting 3 months for a bank or 4 months for a bank to come back to you, and I can get that decision back from you in days, and it makes a big difference.
But above all else, and you know yourself, and everyone listening will know that the absolute key for anything is cost. It's the cost of funding. We're quite competitive in cost. the more lenders, the more projects we can get in our platform, the more lenders we can get in our platform, that will reduce further as well.
Perfect.
Yeah.
Do you ever look at a project that's already active, i.e. like the halfway through, quarter way through, that they just have is that something that they could look at?
Yeah, so the project we funded in Waterford, that was 16 units. That was funded when the developer came to us, that was funded through cash flow. And they needed a bridging loan to see them through to finish. So we would have provided a 7-month bridging loan for that, for 700k.
Okay.
And that would have got them to the end of their construction process, and will be repaid then in December for that loan.
Yeah. So I suppose there is options out there for, I suppose there's a lot of people listening. For us, will be builders looking at finance projects, and we speak to a lot of them on a daily basis, and they deal with funding issues. So you guys could step in and provide some help there.
Yeah, if the project makes sense, we look for a viable exit plan, and we look for first charge security.
Yeah.
But we look at most projects, and if you can come to us with your proposal, and if we if we're going to say no, we'll say no within 48 hours.
So quick,
yeah.
which matters. In terms of regulation, is RAN in play there for peer-to-peer lending?
So at the minute, peer-to-peer lending is not regulated in Ireland.
Yeah.
Even if we wanted to get regulated, we couldn't. We can lend. I mean, obviously, if we couldn't lend, we wouldn't be doing business. So
of course, yeah.
we can only lend to limited companies.
Yeah.
So we can't. I mean, we had a girl coming on to us this morning, she had sold a house, she was purchasing another house, she was looking at a bridging loan for that.
Yeah.
So that's not our business. We can't lend to individuals.
Yeah.
We can only lend to companies.
Okay, that makes sense. And how does that compare to the UK then? Is it regulated in the UK, or? It's
regulated in the UK. The UK would be the most mature peer-to-peer market in the world.
Okay.
There is regulation. There's been regulation in that market for a couple of years now. The good thing about the UK market and how it was regulated was the regulator came in and said, okay, we're going to regulate the market.
Yeah.
We're going to shake up the market a bit, and those unscrupulous lenders, so to speak, exited the market. But those that were still left and that maybe had invested in legals or in their terms and conditions and all the rest of it, those costs were recouped, because the fact that the UK regulated the market meant that those loans could then go into regulated investments.
Yeah.
So by regulating the market, the peer-to-peer market went through the roof over there.
Yeah.
Because the more investors had access to those types of loans.
What's your plan then is for the business as a whole? Would you avoid the UK at that stage, or would you? What is this an Irish only business, or are you looking at any international markets?
Yeah, we'd look to expand internationally, but UK wouldn't be the first market we'd go into. That they are a mature market. We would look at there's some countries on the European continent that the market's quite immature.
Yeah.
So you're looking at Spain, Portugal, Italy. They would maybe have only one real estate peer-to-peer platform over there. So the European market as a whole is quite exciting, and the ECB are talking about regulating the European market as a whole.
Yeah.
So the peer-to-peer market across country would be the same, effectively the same.
Where do you see it then in the next sort of 3 property bridges as a business? Do you think you'll be in a couple of countries, or?
So first and foremost, we've been going 12 months. We've had good success in the Irish market to date.
Yeah.
Our near-term goal is to get into other products within the Irish market. So we're currently looking at commercial bridging loans.
Yeah.
There seems to be a lot of demand for those types of loans. So people that are getting refinanced from funds. Businesses that solid businesses that want to own their premises, things like that. So anything that we can take first charge over. So we're looking to broaden our product base in Ireland, and then after that, I think we can look at going into international markets. I think it would be very helpful for us if the EU regulation came in, EU wide. It would make it a lot easier for us to go into different countries.
Yeah. So we've got a fair few builders, fair few developers that listen in all types of ranges. What type of, if you were to sort of give a persona of a builder that would be ideal for you to contact you, what type of builders are you actually doing business with?
Yeah, it's hard to define a certain persona. It's the small to medium sized guys, the guys that aren't getting serviced already from the banks.
From that 250 to 5 million mark.
The banks, the alternative lenders. We're meeting some very good experienced builders that just don't seem to have access to much finance at the minute. Also people that had very successful construction firms maybe got burnt during the boom.
Plenty of them.
Yeah. And banks and other people out there just don't want to deal with those guys because there's a blemished track record. So I mean, we look at experience the builder. We look at their credit history, but I mean the crash hit everyone, so that won't necessarily be a black mark for us. And we look at the project in itself, whether it's a viable project, what the margins are in it, and what's the location like, and what the exit plan's like.
Sounds great. And if these guys are listening, where can they find you?
So www.propertybridges.com. So that's our website. Go on there, you'll see our contact details. And we're on Facebook, LinkedIn, Twitter, the whole lot. We've got it all covered. Just come on to our website, give us a call.
Google Property Bridge. We'll be watching this closely. David, thanks very much for coming on. Appreciate it.
Thank you.
Cheers.